Hi everyone, welcome back to Pirich Podcast. As you can see, Sashwath this year we are going to discuss another book. So today the book I have chosen is The Most Important Thing, written by Howard Marks. The author begins the book by saying the story behind him writing the book. So he says that when working in the Oak Tree Capital, the author used to write few mails to his clients. So by that he will highlight the important points and he'll post the next mail. And he also says that it is an important point and as mail keeps accumulating, there are most important things. So the author has accumulated the points which he has gathered over the years when working in the Oak Tree Capital. So going by this, have been in a dilemma that we'll have a knowledge and by that time we'll think that that is the important thing, and as time passes, no, that is not important. It keeps happening, particularly the beginners. If they are new to investing, they'll be in constant dilemma. They think that they have gained something, but after a point of time it keeps changing. So what is your answer to that?
So I'm still a beginner and this keeps happening to me. So every time I see something new, immediately my brain says, no, what I knew before was not the most important thing. What I know now is the most important thing. So I come up with a new metric or I come up with a new analysis. I say, okay, this is the most important thing, be it promoter quality or debt, how much debt a company has, or what PE ratio it's trading in comparison to its other peers, or maybe what the interest rate is in the economy. All these things, different times, I feel like they are the most important thing which I need to focus on. And at the end of the day, most of us are better off focusing on all of them and giving each of it the attention it deserves rather than saying this one is the most important thing, because you can't say that in investing. All of those things are important.
Yeah. And I read the first chapter. It is a second level thinking. And going by that, without reading the chapter, I got assumption that you will have some knowledge, and by reading the book, you will have a better understanding of the investment. But I went through the topic, and it says that when investing, we'll have that second thought. And my assumption was totally wrong. So I'll give you the example. When looking at the investment, if the price falls, we'll not immediately invest, and we will wait for another thing that market should fall further, and we'll have that second thought, and this thought will have that repetitively, and we'll have that second mindset. Our mind will be in constant dilemma. So could you please elaborate second level thinking?
Yeah. So one example of second level thinking is when, suppose you have a favorite company, any company, pick any company, and let's say they have some unfavorable news for one quarter. So Berkshire Hathaway had unfavorable profit levels in one quarter. I don't remember exactly which year. And the first level of thinking tells us that, look, the numbers don't look so good, so the price is going to go down. That's the first level of thinking. So the first level of thinking would then tell us maybe we should sell now because the price is going to go down. So why should I hold it? Second level thinking will say, okay, is this profit level going to be this low permanently, or is it temporarily? Is it a short-term thing? Is it a long-term thing? In the short term, if the profit levels have gone down and the next quarter is going to recover, then I'm okay. My stock price will recover again. But let's say this is an inherent problem with the company and this profit level is going to keep going down for the next few years. Then maybe I need to think about exiting it. And this second level thinking, if it's the first case where it's temporary, I should be buying more. Because it's a temporary phenomenon where others don't realize it's a temporary phenomenon and they're selling it in panic. So I can be buying it. So that's one example of second level thinking.
And when gathering the investment knowledge, I have this constant dilemma that how should I gather knowledge? Because we know that investment is big and there are lots of things to learn. And my question to you is, we should look at as how big the ground and start accumulating the knowledge, or I should travel and know in time doing that. I know I have covered this many things, and how should my learning be?
So there's the beautiful part about investing is there need not be one linear way in which you have to learn. You can pick up a little bit of this, a little bit of that, and surprisingly enough, if you pick up a little bit of everything, you do end up having a beautiful thing at the end of it. So it doesn't matter whether today you want to pick up a Howard Marks memo and read it. And it doesn't matter if tomorrow you decide you want to read a Warren Buffett annual report. The main point is that you're picking up things and learning. And like James Clear in Atomic Habits says, if you are 1% better every day, within a very short period of time, let's say 2 years, 3 years, 4 years, you're going to be a completely different person than you were 3 or 4 years before. And I've seen this happen to me, although I wouldn't credit myself to becoming 1% better every day, but I did try to do it at least monthly, weekly, or at least yearly. And this has brought about a change in the way I act as an investor. Today, I still am a beginner, but if you want to get to the level where Warren Buffett is, or want to get to a level where both my uncles are, then you will have to commit to taking a little bit of information from places which you know contain people who are smart. So let's say Howard Marks, or be it Warren Buffett or Seth Klarman, doesn't matter. You pick what's interesting and take from them.
And there is another book called Thinking Fast and Slow. There the author Daniel Kahneman mentions type 1 and type 2 thinking. Here in the book, it is mentioned second level thinking.
Yeah.
So could you please clarify that?
So type 1 thinking is intuition. Intuition meaning that gut feeling, in the sense that immediately when someone tells you something, you start thinking, this guy might not be telling me the truth. So, or if someone says something and then you might say, he looks like a very genuine guy. You don't know where this feeling is coming from, but something in your mind is telling you, yeah, I can trust this person. So that is type 1 thinking. This is learned patterns. You must have seen 10, 20 mistrustful or distrustful people in your life, and you would have learned to pick up on cues. Or you might have seen 10 very trustworthy, humble, and very gentle-hearted people, and you might have learned how to look at someone and learn that, and you don't have to actively think about it anymore. That is type 1 thinking. Type 2 thinking is when I give you a math problem and you need to start calculating how to do it. So if I say, for those of you at home, calculate 78 plus 48, it'll take you some time. You'll start thinking it and you'll start adding, and then you'll give me an answer. But at the same time, if I told you who's the president of India, it's going to come in like that. So this is the difference between type 1 and type 2. If you are very familiar with math, then math can also become type 1 level thinking.
So I hope that this video was informative, and if you want any books to be discussed in the future podcast, do leave us in the comment, and we'll do that in the upcoming videos. So if you found this video useful, please share it with your friends whom you think it will be helpful for them, and please subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.